many people think the crash in Bitcoin, this 50% drawdown, is somewhat of a signal that the business cycle is turning. The question is, of course, are we moving into a recession, or is this like a massive discount of macro expectations by Bitcoin? If a US recession doesn't materialize, which I don't expect, this is like a massive kind of undervaluation by Bitcoin.
We've gone from an October 2025 all-time high, 126,000 or so. As I speak, we're at 66,800. What happened?
The weird thing, we actually topped in October and we followed the median performance, the post-halving performance based on these previous cycles to the T, right? We're still following it. And what was funny about the previous 3.5, 4 years was we did see the bull market in Bitcoin, but at the same time, like the US business cycle, especially US manufacturing, has been mired in a contraction. Retail was mostly absent. We're way below the levels of like 2021. I think that could come back. A revival of like the US business cycle is definitely one of the catalysts.
Where are we now with respect to the business cycle? And what are some of the catalysts or, headwinds, tailwinds that you see that could propel us either way?
Archie.
You wrote a really interesting article about Bitcoin. There's a lot of conjecture about what's happening with Bitcoin. Why is it happening? And, as is usually the case, narrative follows price. And we've seen price do, some interesting things that, not many people anticipated. Some people certainly did, but we've gone from an October 2025 all-time high, 126,000 or so. Mm-hmm. And here we are as I speak, we're at 66,800. What happened?
There are probably many theories, but from an on-chain, let's start with the on-chain perspective. I think if you look at the data, you can quite clearly see that there's been long-term holder selling, right? It started around the summertime already. You saw these news about Satoshi era coins coming to the market. Very old coins that have been inactive for sometimes 10 plus years were moved onto exchange and liquidated. Compared to previous cycle peaks, that was quite significant. We saw around 700,000 Bitcoins, I think in Q4 alone, that was sold by long-term holders. So long-term holders in this context means investors who have held for at least 155 days, right? So I think the selling pressure was more like idiosyncratic, right? While the macro environment was and still is, in my view, very bullish, right? But yet you saw this kind of long-term holder selling. Then we dumped, I think Q4, we peaked in Q4, right? And it could have been related to any kind of reason, right? I mean, I think the common kind of reason is quantum, right? Quantum risks, that could also be related to the belief in the halving cycle, because it's somewhat weird, but we actually followed the halving cycle to the T. Our prediction at Bitwise was like the 4-year cycle is dead, right? The halving cycle is dead, because from a pure quantitative perspective, right, if you compared the supply deficit induced by the halving compared with like institutional demand. Like institutional demand in 2025 has been like 4 times bigger than the supply deficit induced by the halving. So from a pure quantitative perspective, it has become way, way less relevant, right? So we thought, based on this kind of observation, okay, we think this kind of halving effect is not so relevant, and it's not irrelevant, but not so relevant anymore because of institutional buying, etc. And that's why we thought like the 4-year cycle was dead.
Yeah.
Yeah, but the weird thing, we actually topped in October, right? And we followed the median performance, the post-halving performance based on these previous cycles to the T, right?
Yeah.
And we followed this kind of post-halving performance, and we're still following it, right? And that could have been one of the reasons.
Couldn't it be that you can be both right and wrong on that, in the sense that the halving quantitatively does not really have an impact on the supply and demand of Bitcoin, and that's quite clear to see, right? But there could be a remnant from a cultural, psychological point of view that still persists and drives market sentiment to some extent, and then leading into other factors that you were going to discuss as well.
Exactly. I mean, you can be right or wrong. I mean, maybe it's a kind of self-fulfilling prophecy because based on the past bull cycles and bear cycles, you've seen this effect, although there is a case to be made for that previous cycles haven't been caused so much by the halving itself, but by the macro cycle, the business cycle, right? Because the halving events, they've actually coincided with business cycle troughs in the US, right? So 2012, you saw this kind of business cycle trough because of the euro crisis. 2016 was because of this yuan shock and manufacturing recession in the US. 2020 was because of COVID, right? And 2024, 2025 was because of the tariff shock, right? We also had the kind of business cycle trough, right? And so you have this kind of coincidence. And so, of course, the easy kind of conclusion is to say like, okay, it's attributable to the halving, but it could very well be attributable to the business cycle itself, right? If you look for, and I've posted that chart, I think a couple of weeks ago, that's a funny kind of, it's actually a very strong correlation between the deviation of Bitcoin from the power law trend, which is, in my view, essentially like long-term adoption trend, right? Structural adoption trend. And so this deviation and the ISM manufacturing index.
So I just want to take a pause and quickly just define a few terms, because when people refer to the business cycle, and we'll do that with liquidity as well, but when people refer to the business cycle, what do they mean? Because we hear ISM, PMI, all these different indicators and indexes and indices, and so we don't know what they're actually specifically referring to and whether it's a global measure or it's a local measure like the United States. So like, how do we set the context for that discussion?
Very good question. So ISM manufacturing index is a purchase manager index. It's a survey of purchase managers in the US. And ISM means Institute for Supply Management. That's like the institute that's doing the survey. And it's a monthly survey, right? It's a kind of sentiment index, but business cycle sentiment survey. And so like the ISM manufacturing index, it's a local index and is also tied to manufacturing. But it has become somewhat of the gold standard for like the business cycle, even the global business cycle, because it has a very long history. I think the ISM survey starts in the 1940s already, or even 1950s. So a very long time series history. The US has been, up until the 2000s, the dominant economy, like on worldwide, right? Has been overtaken by China, but it was and still the second biggest, right? Well, worldwide.
And the methodology relies on, it's not a quantitative measure, is it? It's, like you said, it's a sentiment measure. So
it's a kind of sentiment measure. So this index fluctuates around 50, and 50 is like the neutral line. Anything above 50 is expansion, right? Implies expansion and like a positive outlook by these purchase managers. And anything below 50 implies contraction, right? And what was funny about the previous 3.5-4 years was like we did see the bull market in Bitcoin, which started in like early 2023, late 2022. But at the same time, like the US business cycle, especially US manufacturing, has been mired in a contraction for essentially 3.5-4 years. Like this ISM manufacturing index has been below 50 all the time.
So the Bitcoin bull market has been occurring during a time of ISM contraction.
Exactly.
Which is counterfactual to, or counter-cyclical to what we've seen in previous Bitcoin cycles. Usually it correlates with an upswing in one, results in an upswing in the other.
Exactly.
But now we've seen Bitcoin go from 15,500 to 126,000.
Exactly. Yeah. Without any kind of tailwind from the macro side, in my view, right? if you talk about liquidity, there are different kinds of implications, but
we can get to that.
Yeah.
But first of all, we can't. I can't let the conversation go without discussing why that is. Why do you think that happened? Because I know in the course of 2.5-3 years since the bottom of the bear market, we've had enormous institutional adoption.
Exactly.
And we were just talking about that was a new layer of demand that came into Bitcoin. We had the ETFs, we had, banks allocating or recommending an allocation. So like, is that alone accounting for Bitcoin going up while ISM contracted?
I think retail was mostly absent.
Mm-hmm.
If you look at Google Trends for like search terms for like Bitcoin or crypto,
mm-hmm.
I think it was mostly below 50, right?
Yeah. No, it's been a 3-year bear market of Google Trends.
Exactly.
Searches,
you probably notice it in like YouTube clicks, right?
Yeah.
Like we're way below the levels, and we just talked about this before the show, right? We're way below the levels of like 2021, when we had like huge retail interest in crypto assets,
mm-hmm.
right? So retail was largely absent, right? And my explanation for this is it's because of macro, because the macro economy was like weak or weakening, right? ISM was in contraction, manufacturing was not doing well. If you look at consumer sentiment in the US, it's a very similar story, right? It actually correlates with like the crypto fear and greed index. So there's a connection there between like consumer sentiment, the economy, and like overall crypto sentiment. And so, but at the same time, Bitcoin was grinding higher, right? You mentioned we went from like 15K to 126K without any kind of significant tailwind from the macro side. And of course, it's been due to significant buying by ETPs, so exchange-traded products around the globe, especially US ETFs starting in January 2024, right? And we've seen huge demand from ETFs, right? They've bought up multiples of the new supply every day, right, in the bull market. Same for treasury companies, and MSCI is still buying lots of Bitcoin through Stretch, right? Issuing Stretch and buying Bitcoin. But I think there's definitely a bull market in a structural bull market in institutional demand, because we went from around like 2 to 3% of Bitcoin supply owned by ETPs and treasury companies, I think, before 2024. And then it took off. Now they own more than 12% of the supply, right? And if you account for sovereign holdings, it's even way higher. It's closer to 20%, right? So we've seen like a bull market in institutional demand, while retail has been mostly absent. And I think that could come back, and we could talk about the catalysts. I think a revival of like the US business cycle is definitely one of the catalysts, right? And you already see job openings, to be fair, they've been very weak, right? You have this fear about like AI replacing white collar jobs and stuff. And it's true. But you have to use a magnifier, right, to see like the increase in productivity and output per hour and so on. Mm-hmm. It's happening, but it's not like as strong as many believe, at least in the data, right?
I want to interrupt you there because I want to get onto the institutional adoption and catalysts for retail in a moment, but I want to finish the point about the business cycle and the ISM. So if Bitcoin has been going up while that's been contracting for 2.5-3 years, where are we now with respect to the business cycle? And what are some of the catalysts or headwinds, tailwinds that you see that could propel us either way?
So in terms of the US business cycle and global business cycle as well, I think we troughed in early 2025 again. It was somewhat of a reset because of this tariff shock, like because of tariff shock, like you saw this drawdown in equity markets, in the ISM as well. Some of the components were like very deeply contractionary, right? So we had a kind of reset of the business cycle. Right. Yeah. And since then, a new kind of recovery.
We also had, a semi-war as well with the strikes on Iran. And there was
exactly.
Yeah, an open 12-day war. It's a full-blown war between Israel and Iran for that time. And that would have put a dampener on things. It's almost like the Trump administration is, foot on the pedal, foot on the gas at the same time. And we're just about approaching perhaps round 2 of that war
Exactly.
now. It's like we can't really get any clean air, clean run at the markets.
That's probably like a structural thing. But I think what happened in 2025 was because of this tariff uncertainty and like global economic policy uncertainty hit like a record high. But the good news is, and the consequence of this kind of peak uncertainty was central banks started cutting rates, right? They eased monetary policy, and not only the Fed, right? It was also Bank of England, ECB, Swiss National Bank, except maybe Bank of Japan, but all of these major central banks cut rates. They cut rates the most since 2009, since subprime. So COVID was an exception. Like every central bank went like crazy. But the post-2025 rate cuts were the highest since 2009, since subprime, which is insane, right? And so this tends to be a leading indicator. It tends to lead even like these very forward-looking indicators, not even the ISM. I mean, I'm talking about like even 6 months expectations of like manufacturing activity, like Empire State future activity, Philly Fed future activity, all these like very forward-looking expectations-based indices and surveys, which are essentially animal spirits, about the business cycle. And yeah, the liquidity cycle and this kind of central bank rate cutting cycle leads these indicators. That's why I think the growth picture will stay robust in 2026. So on the macro will stay very robust. At the same time, many people think, right, the crash in Bitcoin, this 50% drawdown, is somewhat of a signal that the business cycle is turning, right, decisively, that liquidity is turning, that financial conditions are like tightening significantly, because Bitcoin tends to be this kind of canary in the macro coal mine. But the question is, of course, are we moving into a recession? Is liquidity tightening that much? Or is this like a massive discount of macro expectations by Bitcoin, right? Because if a US recession doesn't materialize, which I don't expect, if a US recession doesn't materialize, this is like a massive kind of undervaluation by Bitcoin, right? And we can talk about liquidity metrics as well, but as far as I can see it, there is no such thing as peak liquidity right now. But yeah, we can talk about this as well.
You're saying the business cycle troughed, say bottomed about 9 months ago, maybe even 10 months ago.
Yeah, around
so we're talking April, March, right?
Yeah, exactly.
If that's the case, isn't that too short a time for conditions to just reverse? Because my understanding is business cycles, it's like like turning the Titanic, right? It's going to take some time to do that. So 9 months seems to me to be quite a short time to go from bottoming to topping, right?
Exactly. I see it the same way. So not only in terms of duration, but also in terms of liquidity and leading indicators of liquidity, right? I think Michael Howell just published a piece about we've reached peak liquidity, right? But if you look at things like global money supply growth, right, it's still growing at a plus 10% year-over-year rate, right? If you look at things like central bank balance sheets on a global base, not only the Fed, right, but also like Bank of England, the major ones like People's Bank of China and so on. I mean, it's stalling, right? But it's not like we're falling off a cliff or we're contracting significantly. Not like we did, for instance, 2022 or 2019. We saw a massive contraction in both liquidity, central bank reserves, right, and global money supply, which was totally consistent with like a Bitcoin bear market. We don't see it this time. To the contrary, right? All of these indicators are still accelerating. So we're still far away from any kind of peak in liquidity, right? Maybe the growth rate is peaking, but even if you look at US money supply, it looks like it's peaking. Like if you look at things like US M2 money supply, has plateaued or flatlined around 5% year-over-year growth. But there are leading indicators that you could look at. For instance, a good leading indicator for US money supply growth is the yield curve or the steepness of the yield curve. So essentially like the term spread between like 10-year US Treasury yields and 2-year US Treasury yields. And this continues to steepen, right? This continues to widen that spread. And I think it reached a new cycle high in February. It has come down a bit more recently, but still doesn't look like it's turning the corner, or reversing. So there's no imminent kind of trend change visible in these leading indicators, right? And the reason why the yield curve leads US money supply is because banks are incentivized to create more loans, right? To create more money, because they have a higher interest rate margin, right? Because they tend to lend over the long term and refinance over the short term. So this is essentially like a proxy for the interest rate margin, right? And so there's at least as far as I can tell, and when I look at all these indicators, including the US 10-year yield itself, like the 2-year change in the US 10-year yield also tends to lead US money supply growth, right? And there's no indication whatsoever that this is turning around, right?